Okay, this is how I get daily bias. So first I start with institutional order flow. So with this, it's just looking which up or down closed candles are being respected. Like here, you can see this up closed candle being respected, and the price is a bit choppy here, but in general you can just see the up closed candles are being respected. So this is bearish order flow. And if I just want to show another example, like here we can see the down closed candles are being respected by price. The bodies are down here. So price is respecting this candle. So this would be bullish order flow. So with the daily bias, I just look currently what's being respected. Like right now we can see these candles here got violated and in this move up, and this candle here was respected. So you can see now price is trading up into this candle. So the last thing it traded away from was a down candle. So this would be, while it was trading here, I'd be looking for this candle to, these candles here, to get violated. So then after my order flow and I have an idea what's being respected, what's being violated, I do intermarket analysis. So this, just looking at DXY, I do the same thing, just quickly go look what P arrays or what up and down close candles are being respected. Like right now, price was trading bullishly, not even coming down to these down close candles, just trading into PD arrays, fair value gaps, and it was violating these P arrays, this fair value gap, and these order blocks on this side. So from here I can say that DXY was bullish, and then we got up to here, traded into this PD array, and now we see these up close candles being respected. So if my DXY analysis and Euro analysis is on the right side, they're in confluence, then I look for high probability trades. After intermarket analysis, I do looking at the market structure. So this is just looking at the highs and lows that are in control. So right now we have this low, this low. So we see the highs and lows in the recent price range. Usually when I'm doing my analysis on the weekends, I do use the 20-day range, just going back 20 days or 40 or 60, wherever the range is. So from this high to this low would be the range. So I'm looking, are the lows being respected, the highs being respected. So right now we saw this low get taken, and then this high as well. So if price is going to continue bullishly, I'm going to want to see this high get taken. So just looking basically at the trend, so we're seeing on the more long term, we're seeing this low in control, and then this high in control. So in this range, what I'm going to want to do is just see how the highs and lows are being treated by price. So here we can see prices respecting lows, taking highs. So this should be bullish order flow. So right now we're gonna see if I'm anticipating price to be bullish, then I'm gonna go with the idea of taking this high. But recently the lows have been getting respected. getting violated and the highs respected. So in the short term daily, you could say bearish, but just now because of my weekly bias, which is also important, you have to have that done before trying to get a daily bias and framing trades out on this. So I'm looking for a way to frame my a daily bias within my weekly bias. So after I have market structure, I'm aware of the highs and lows, what's more likely to get violated and what's more likely to get respected. Then I look at the PDRA matrix. So with this, I'm just looking for PDRAs within the price range here. So like an order block here, fair value gap, what's being respected and what's being violated. So if we're seeing bullish PDRAs respected and we're seeing bearish ones violated, then I can say from looking at which ones are being violated and which ones are being respected, I'm just going to carry on in that direction until we trade into something which could send price either way. So right now, looking here, after this candle closed on Tuesday, from Wednesday, we saw price trading away from this order block and more into this order block on this side. So right now, we can see that price did trade up through this and then respected it, and now we're seeing price trading up here. So if price closes above this mean threshold, it's not completely violated, but I will go with the idea that price is more probable to just carry on continuing up. So now with the weekly bias, I'm going to have an idea of where the weekly is going. So with that, I go look at the week, where's the red folders, what times. Like on Tuesday, now there's one at 8:30, so I know in the day, if I'm bearish on this day, I'm going to look to sell in New York session. So if I'm going to trade London, I can look for that either to be pure manipulation or to trade the Tudor swing. I'm going to look for it to be in alignment with this bias. So when I have the bias for the day, looking at the daily charts, I have an idea of how the day is going to pan out, and then I have my weekly bias, and from there I'm going to be looking to frame or anticipate a weekly profile. So with weekly profiles, with weekly profiles, I try anticipate from this. If I don't, then I just carry on. Say it was Monday, I was anticipating Monday to trade lower and trade a low of the week, just for example. And then I see Monday trade higher. Then I will adjust my anticipation of the weekly profile and keep it lined up with my bias from the daily charts, my weekly bias, and how I think the days are going to pan out.